You're in the Business Insurance Zone with me, Steve Savant, national insurance columnist and financial color commentator. And today on The Biz, can insurance products really mitigate risk? Well, we've been doing it for 400 years. It's all part of our investment risk management series right here on The Biz.
When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.
Well, welcome everyone. I'm Steve Savant, and I'm the host of the Business Insurance Zone, and we're broadcasting live to a nationwide audience of financial advisors right here in Fountain Hills, Arizona, home of America's largest fountain. And with me today, day 5, our final day, Mark Langerman. How you doing, Mark?
Good, Steve. Thank you.
We've been talking about terror-free investing and all this week, and I have to say we didn't touch on one area which is our forte in the Business Insurance Zone. That is looking at terror-free investing as a way to protect. If we're out of, what was it, about a week ago or so, you have stocks in Iran, you have stocks in different companies, and all of a sudden they decide to go rogue on us for some political reason, and all of a sudden my portfolio goes down and I have nothing to do with that. So now what I'm looking at is terror-free investing as a mitigating risk idea. It's an idea to protect my investment. It's kind of like hedging my bet.
Well, it is hedging your bet, obviously. It's like, there's everybody always talks about the opponents of this type of investing actually talk about fiduciary liability. Okay, it always comes up. So we have fiduciary responsibility. So, well, my duty is to make the best return for my clients, et cetera, et cetera, et cetera. Well, I would also argue that if part of our fiduciary responsibility is to prevent being in situations which there are risks, for putting clients in investment, which there are additional risks. So I can argue as well that from a fiduciary standpoint, paying attention to global security risk is a true risk mitigation strategy and does fall in line with our fiduciary responsibilities. So again, I agree with you, but like you said, last week, Standard Chartered, yesterday, Deutsche Bank, a couple weeks ago or a month ago was HSBC. It's happened here in the US. And I will talk about one US company in a while if we have time, but I think that if we can avoid, if we know that there's a likelihood these guys are going to have problems, the host country isn't going to pay its bills, or there's going to be riots, or things like that.
Well, the one thing you said a couple days ago that kind of concerned me was that we're looking at issuing debentures and debts to these companies, and they're part of our portfolio. And half the time we're forgiving notes, we're forgiving debt, as a country. And I wonder how that leaks into our corporate bonds, and how we're playing in that regard. And so I always look at this as a defensive posture. So if I want to go out in the world and I'm into international, and here's the problem, I guess, in my mind, I thought, well, I'm not into international or emerging markets.
But look at the S&P 500.
But look at the S&P 500, So when I think about that, I say, okay, I know that my insurance products are there to mitigate risk. That's why I sell them, that's why we buy them, that's what our Business Insurance Zone is all about. When I look at that, though, we participate, and we do, through multiple indices. I mean, I think the last time I looked, we're at like 15, 16 different indices worldwide that we're using. And on top of that, all the equity positions that we use for variable annuities and variable life. So we are entrenched in it even on the insurance side. So we have insurance carriers now that are looking into this whole issue of terror-free investing. I mean, they're becoming conscious. I mean, one of the first companies, I give them kudos for this, and I'll give them a free one on the show. Acacia Mutual was one of the few companies early on that got into really serious investing on the conscience issues, and they really looked at this as an issue that they wanted. The Culvert Securities, I think, is their proprietary fund. They're one of the earliest online about issues like this, not specifically to this issue, but the idea. And now all of a sudden, with all the government pensions going this way, I think that you're going to see some of the insurance carriers start to go, hey, we need to go this way.
Well, it's interesting. About 2 weeks ago, there was also some news out about a proposed legislation to offer a terror-free alternative in the thrift savings plan, the U.S. government's thrift savings plan. Several states, including Florida, are looking at adding a quote-unquote terror-free sleeve to their portfolio. So it's becoming more and more popular. And as I talk to producers and advisors, you know, I let them know. I said, don't get caught off guard. Okay, someone's going to bring this up to your clients, and you have the opportunity to do it now, as opposed to, you know, 6 months down the road where you really don't know what's going on. So.
Well, I see this as a complete defensive posture.
Yeah, it is.
It is. And so even if you're in a full asset management portfolio model, or you're in our side where we do package products with insurance, these issues are really becoming some of those issues. I told you that one index, the moment my annual reset is up there, I am dumping that emerging market because that list has the similar list to the State Department's terror countries.
It's just opening a lot of eyes. It's opening a lot of eyes. Bringing a new, a new element to our jobs.
Well, when I think about it, I'm trying to think about, you know, your practice. You have a practice where you guys are registered investment advisory. You have a huge portfolio that you're dealing with, and you're mitigating risks by using the Patriot Fund as a defensive posture, hedging your bets. And I totally buy into this is one part of the fiduciary practice of protecting my client. I totally see that. Yeah, I think that's a total return issue. So, but my thought is, on insurance products, though, on that issue, right? I've never really thought it through, because usually we're just looking for the death benefit. I'm not really considering, hey, the company's the cost of insurance, the tax advantages, all those things I talk about, but I never get in deep with these kind of issues.
Well, we still have some time left, so hopefully we can get a little bit deeper in the remaining time. Yeah.
Well, when we come back from the break, I think I want to get into a kind of a last push, and really trying to wrap up the whole week with kind of a summary statement so that we can understand what we're talking about. Think about it. We're looking at all this now in all of our portfolios, and I'm sure our insurance carriers that monitor my show for compliance alone are probably looking at this show going, we need to kind of touch base and look at this. If you want to write me about this, just write me, thebiz@brokersalliance.com, or call me toll free, 1-800-290-7226, or hop out to our website, www.brokersalliance.com. When we come back from the break, we'll hear more from Mark.
You're listening to the insurance industry's #1 resource for products, planning ideas, carrier information, and interviews you can use. When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.
Companies in our business are always touting service, products, and underwriting. And we do that too. But here's the difference. Now enter the world of the elite producer with a value package that cuts us out of the pack. A BD that approves social media marketing of non-FINRA products and doesn't take an override. With the best competition desk in the industry, and for our loyal producers, a true group health plan. No one offers that. Brokers Alliance does.
Well, welcome back to the Business Insurance Zone. I'm your host, Steve Savan. I'm here with Mark Langerman. We're talking about terror-free investing. And we're talking about insurance products because, actually, think about this. Insurance products are a defensive posture anyways, whether it's taxes, right? Or whether it's death benefit, or whether it's income I can't outlive. All these are protectionist products. They're really there to help us. But it bothered me a little bit when I first met Mark that, hey, I might have some products in here that have some countries or third world markets or emerging markets that I maybe don't agree with politically. And I would like to shut the supply off of my money and investment. And I went through my index, as I said before in the first segment, and I looked at it and I found it. And I'm looking at all of our indexing. And if you say, Steve, I want to see the complete indices that we sell for annuities and life, I have the complete list here. If you want to see all of them, and some of these actually put out what countries they're in, you may want to play this game that I'm playing now. And I noticed that emerging markets, the people that are getting into this, that the emerging market sales on a lot of our indexes is small, way small. So people are either they're awake to this or they already are feeling a little dangerous about playing in that realm. So go ahead.
No, I want to talk about the risk management that we talked about in the last segment, and that's that, just to be clear, I don't necessarily view terror-free investing as a risk mitigation strategy in a vacuum, but as a strategy as part of a whole investment portfolio. Clearly, we're mitigating global security risk by investing in that style. So I just want to kind of clear that up. And as far, let me share something with you real quick. About 5 years ago, when I discovered this and found out about it, there were about 400 companies roughly globally that had active non-humanitarian business ties with Iran, Syria, North Korea, and Sudan, the state-sponsored force-based for terror. And today, with all the sanctions, with all the the public discourse about it and so on, most people would think, well, the number's gone down. It's actually increased, and that's why what we're doing right now, it's close to 650. So it's gone up significantly in the past few years, and that's why it's more important now than ever. That's what clients are saying. They see that, and it's like, okay, we've got to do something, because frankly, the UN and the U.S. government, as much as I love some of these folks, they're not going to do that. They have other agendas. We can put a stop. I believe we can put a stop to terrorism with this.
Well, I really like the ability to have the individual investor make a call on this, and most of us who feel strongly about this area that you're talking about are going to review like I did. I went through my review. I'm saying I'm looking through it, and if I can reposition my product line and my investment, especially for my retirement, I can't imagine myself kicking back thinking that I just made a great rate of return to a company who's trying to destroy America.
Right, yeah.
It just doesn't make sense.
I know, it doesn't make sense.
Yeah, so I don't want to fund them anymore, and I want to be able to come to a place where I can look at this legitimately. Now, in insurance products, all our products, we've been doing this for 400 years. I mean, and the globe is so small now. I mean, we just saw the Olympics, right? And we have 190 plus countries, and we had about 85 people medal in those Olympics. When you see the world in that microcosm in London, it really tells me, wow, this is small, and really everything now is correlated. It's hard to get yourself divested from anything. Yeah. Everybody's so intertwined. But these are some of these tactics that you brought up that we want to look at even in our insurance investing. Think about this. If I'm an insurance company putting out a product and I'm doing it for defensive posture, how can I do it for defensive posture if I'm going to be exposed to some kind of a risk like this?
Well, I agree with you. And in addition to that, they just, we're finding that more people want to offer it. I mean, the fund has been picked up on a lot of platforms, big firm platforms. So there is demand there. And then there's the business side of it, there's the personal side of it. And I agree with you, it'd be great. We're hoping maybe these shows will help to generate some interest and bring the Patriot Fund onto some of these platforms. That would be great. We would welcome your calls. Yeah.
Well, I think one of the things we'll do is, because again, we have a lot of carrier participation in our viewership, and we know many of our senior management of our carriers, and I think they are, most of that I meet are very pro-American and very USA, and I think they're going to sit there and look at this and say, we need to examine this from our product portfolio alone, because a lot of times when people pick a final product in insurance, the final number, especially in variable products, is going to be what are the total funds involved and what has been their returns, and is there any hedging? I mean, one of the reasons we got into indexing was because we could hedge and preserve the principal. Now we have people sitting there going, I think there's equity positions that we could give some kind of hedging, some kind of protection, and I think that will be attractive for people to come back into care. And by the way, the variable market, which was almost dead 2 years ago, right, is now starting, oddly enough, to making a major comeback. And I just saw some subtle shifts of carriers moving back into this with some unique riders and some possibility of making a portfolio that they can hedge against principal. So that's that number. It isn't there yet, but I think we're going that way. Now, before we get out of here, again, the thing that has surprised me most of all is usually the mass media doesn't pick up on something unless it's big. And with you going to Fox News twice now, and I'm sure that this will help you get to the third time.
Yeah, let's hope so.
Yeah, hopefully. And if you're watching, there you
go.
CNBC.
CNN, sure, all of us,
I think when you think about this, this is going on the major public media. When the mainstream media starts picking up things like this, then I'm telling you, this is something that we should be looking at. Best part about it for Mark, though, this impacted his personal production. This impacted his actual business, the way he does his practice. This is such an anomalous issue. And I want you to start thinking about it. How distinct is your marketing? You could go to prospects now with a whole new avenue, an avenue that would help America and an avenue that would help your own practice. That, to me, is everything. You've been listening to the Buzz on the Biz for today. You're in the Business Insurance Zone with me, Steve Savant. Have a good weekend.
The Biz is brought to you by Brokers Alliance, a national leader in insurance products, support services, and educational workshops. When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.